How's it going, everybody? My name is Antonio, and I am on the barbecue this week with Jose Vizquerra, the CEO of OIII Mining, which is a gold exploration and development company with assets in Quebec. Who's not here with us today, though, is your financial advisor. This is going to be just a talk, sort of a casual talk between two people who, well, you've likely never met, so you don't necessarily have a reason to trust us blindly. So as far as you know, as a viewer or listener concerned, this is just going to be a conversation that's general and impersonal in nature. It's not going to take your personal situation into account. And it's also going to be a conversation that will include no financial nor professional advice of any sorts. It's also definitely not a conversation that you want to, again, use blindly as an independent research, because it's going to include a lot of forward-looking statements about things that may or may not happen in the future, uncertain events, basically. And just in general, the mineral exploration, development, and mining industry is among the higher risk industries out there. So if you don't like losing money, please do more research by visiting setter.com and analyzing the company's official filings, as well as consult a professional investment advisor before being a grown person and taking your own decisions in the end. That all said, OIII is a $110 million Canadian, that is, gold exploration and development company, at least at the time of recording of this video. They have about 75 million shares outstanding, which makes it $1.45, $1.50 Canadian, again, stock, with a 52-week low of $1.13 and a 52-week high of $1.79. Stocks trading on a TSX Ventures exchange under the ticker symbol OIII, so it's OIII, and that's meant to be O3 because, well, you'll get it. And there's an average of about 30,000 shares that have traded per day over the last 90 days over there. The company is partly owned by Osisko Mining, which owns over 29% of it, management, which owns about 6%, most of which is the CEO that we have over here, and institutional shareholders, which own about 25% of OIII, and that leaves us with a float of about 47.5%, 48% sort of free floating shares. The company currently has about $15 million in cash and about $33.5 million invested in other companies. At least that was the market value of their holdings at earlier this month. And that included, those holdings included an over 20% ownership of Moneta Gold. Moneta Gold is a gold exploration development company as well. They also have assets in Ontario, but they are often called the largest gold exploration company in Canada, at least. So that's a notable shareholding. What else is a notable shareholding? Well, I guess Cartier Resources. They have a 14.2% ownership of Cartier Resources. They hold a large land position in proximity to the main assets of OIII. And OIII has a lot of assets. They actually have a portfolio of assets in Quebec, specifically in the Golden Valley, or as the French would say, Val d'Or. They've got quite a lot of ground there, about 65,000 hectares, which is about 650 square kilometers. And there's about 2.9 million ounces of gold to be found in the measured and indicated category, about 1.18 grams per ton. And about 770,000 ounces of those are at a higher grade of about 3 grams per ton. There's also, again, quite a few projects. So I won't be going over all of them, but the main project here, so the flagship project, is the Marbon Alliance. Now, this asset is not tiny, but it's not huge either, or at least not yet. But that's going to be the center of the conversation here. It's about 75 square kilometers, the piece of land that it's located on. And it's about 12 kilometers away from Canadian Malartic, at least from the Canadian Malartic mine. So that's again an important thing to note here. This is their flagship asset because there's already been quite a lot of work done on it. This is a pre-feasibility stage asset. It was late last year that they did the pre-feasibility on it, and they showed a post-tax NPV. This is at a 5% discount rate since it's a gold asset. And they was showing a post-tax NPV of $465 million and a 23% post-tax IRR, with an expected annual production of 161,000 ounces of gold. And that's after a $435 million capex, which is expected to be paid back, at least at the current gold price, give or take, after about 3 years of producing gold. And they hope to be doing that at $882 life of mine, all-in sustaining cost. However, that's not everything, and the company is hoping to find more gold at this project, at this deposit, since there's currently a 14,000 meter drill program ongoing on this project that is aimed at both growing the resources, and there's also an additional 2,400 meters that is being drilled as part of the final feasibility study, the EFS here, which O3, by the way, is hoping to have completed in the first half of next year, so 2024. Right next to Marban Alliance, the company also has the Malartic Horizon, or just Horizon project. This was actually part of one project, and they split it into two. And this now has an open pit MRE on it of about 342,000 ounces of gold at an average grade of about 1 gram per ton, give or take. And the theoretical advantage here would be that this deposit is located, again, very close to the other one. So it is within 5 kilometers of where the company is hoping to have the processing plant, or at least the one that they're budgeting for the Marban Alliance project. So that's an advantage there. There are many other projects, by the way. And so again, I'm not going to go over all of them, but there is one more that I want to touch upon. It's a more advanced exploration project. It's called the Alpha Project. This one's located in the Cadillac Break. This is 25 kilometers east of the Marban Alliance project. It's also nestled close to other future mines. And there's currently also a drill program going on there. There's 4,000 meters of drilling ongoing on there. And yeah, as I briefly mentioned, they have other projects. They have a total of 7 projects, I believe. Well, 6 besides to the one. Is it? Yeah, I think maybe 5 besides to the one that I just mentioned. As I said, Cadillac area. There's other projects in the Labrador and the Abitibi area, as I said, and so on and so forth, and others in Ontario. So again, there's a whole lot of things going on here. So it's probably best if I'd shut up already and give the word to the CEO. So Jose, thank you for investing your time with me, sir.
Antonio, thank you very much for having us in your program. We're very happy to be here.
The pleasure is all mine, of course. And although I tried giving you a fair overview at the beginning, I'm definitely missing some stuff. So what's something important that I'm missing or getting wrong on O3 so far?
I think that the story here is not far from what you said. Although I think we can summarize this story in a very simple way. This is a company that has a fundamental value, which you refer to it, a net present value of $465 million at a 5% discount rate. That's fundamental value. We have a market cap of $110 million or so Canadian, and we have effectively $50 million in cash, which means that essentially our enterprise value, which is the market cap minus the cash and equities that we have, is around $50 million, which means that effectively we have the opportunity, if we reach the maximum level of our net present value, an opportunity of making 10 times the enterprise value. 50 times 10, 500. So there is a huge opportunity here in the case of O3 with the assets that we have already proven that are there. Because one thing that you mentioned, which is very important, is that we already have a pre-feasibility study. And what a pre-feasibility study means for your audience that may know or not know about mining is that a pre-feasibility study can only be done with those resources that are measured or indicated. And what that means for a company like O3 and an asset like Marban is that our drilling, in order to quantify the volume, like if this is the volume, let's say, and our ore is inside, we would have had to drill it every 35 meters. That's an indicated category. If I drilled every 100 meters, I have less certainty. That's an inferred category. You cannot use those ones for what we're doing. Only the ones that are 35 or less can be used. So the certainty of the volume of the project and the certainty on the engineering that we have used in our project is quite substantial. And that makes this project very unique because we have reduced the risk while we are maximizing the value. And now, where do you maximize the value is to what you alluded as they have right now 2.8 million ounces out of the 4 million ounces in the total company. How much more can they find? And the reality is that we are right now within 2 major structures, which are the Norbenite and the Marbenite. And we have continued to find mineralization along those 2 main structures. And that's the case of Marban, then was Quirenza Nolartic, recently has been Malartic H, and now we're drilling even further northeast in horizon in an area that we call the VMS target. And we are very excited on what we could potentially find there. Maybe we end up finding base metals and gold. We will see what comes out from that target. But we have identified over 15 targets inside the area where we operate right now that we still have to test. So the potential for finding more or to make it bigger, it's quite important. And maybe to finish, not to bore your audience, the biggest opportunity here as well is in the reduction of CapEx. Because our CapEx right now is around $435 million. But that involves us building the mill inside Marban. The opportunity that exists here is to work on the synergies that exist with the groups that are around us, including amongst them, Agnico Eagle, who has a mill 12 kilometers from where we are, and where they have said, not us, very openly, that by 2027, they will have an excess of capacity of 40,000 tons per day, which means an asset like ours needs 15,000 tons per day. We could make an arrangement with them where we could send the ore and they can process the ore. If we manage to do that, the reduction in CapEx is almost half for us. And the certainty that the project will be built and that we will be producing 160,000 ounces is massive. Now, more important than that, and I get super excited because my purpose when I left Peru, where I come from, was to build the first mine in Canada as a Peruvian, is that if we produce 160,000 ounces, today, there are companies like Wesdome, like Orla, that are worth over $1 billion with that production. So my dream is, okay, if we can come up with a production of 160,000 ounces by 2027, that means that we could be even more than our net present value, because that's how the market values these companies. And that's what gets me so excited.
Okay, yeah, there's a lot to talk about there, a lot to touch upon. But let's maybe just get things straight first. What kind of a company are you? Like, are you an explorer who's looking to define and sell assets, or are you besides obviously the mine that you just told me about, with all the other assets that you have, do you want to build a mine out of all of them, or do you want to turn into sort of a miner and then have all these holdings like you're developing a portfolio now?
Our focus is to be a mining company, an intermediate mining company. When I left Peru in 2011, was with the dream of being the first Peruvian to build a mine in Canada. I think Marban will be the first mine. Alpha, which is very close from the Orbel mill, which we have an option to buy that mill, is close enough that we can put into production. We need to find more ore, so that can be our second mine. And from there, we will have to work on consolidation. We have two assets where we are working right now in Quebec, but they are earlier stage and way far from production. So if we really want to think in the next 5 years, we have to think about Marban first, then Alpha, then consolidation with other assets. And that's what will be the growth of O3 Mining. I don't think there is any mining company that do well by thinking that they are just going to decorate and sell. I think you have to be focused on what you want to do. In our case, is to be a mining company. In the middle, of course, if you're doing the right things, you might be taken over, but then you will be fully priced. No?
Okay, so that's an important point. I think we're going to touch upon that towards the second part of the conversation as well. But just before that, before you can actually start building a mine, you have to spend another $8 to $10 million to get the Marban project to a point where it would make sense to start building a mine, right?
Yes, we have finalized our pre-feasibility study. We have $8 million in the bank that are already assigned for more exploration. And we probably will need between $8 and $10 million to get into the feasibility study, which then we would look for the project financing. No, now for the feasibility study, we would like to explore for alternatives first amongst the different groups that works in the region, meaning by that Agnico Eagle with the Canadian Malartic mine, El Dorado with the Sigma mine, Agnico with the Goldex mine, and see if there is any opportunity to be able to process our ore without us having to build the mill. And we want to do that prior to work on the feasibility, because in that way, the feasibility will already have the concept that we will not have to build a mill inside the O3 mining camp. We will give us time until November or December to see if we can accomplish that. If we cannot accomplish that by December, or we don't see the light at the end of the tunnel, we will just pull the trigger with our feasibility, assuming that we'll build it ourselves.
Okay. In between now and then is also an interesting period, though. And you have about, as I mentioned at the beginning, $15 million, so $15 million in cash right now. But you're planning, if I took this correctly, you're planning on spending $250,000 a month on study advancements, so working on those studies, and $1.2 million a month over the next 6 months on additional exploration activities, as well as there's roughly $500K a month on total G&A for the year that you've budgeted. So if my math is correct, that's about a total spend of about $2 million a month. You already have a portion dedicated to the feasibility study. Does that mean that you're going to be looking for a capital raise before year end?
I don't think so, because we still have right now the convert that we just did recently, and that covers all the hard dollars. We still have $8 million on flow-through money. Flow-through is just an instrument that we use in Canada in order to raise money with less dilution, just for your audience. The way that works is, for example, if we have to raise $10 million, effectively what we have to raise is really 6, because we have a premium on the money that we raise because people are deducting from their taxes. So usually the premiums in Quebec are between 60 and 80%. That's to cover that part of the money. We also have these positions in Moneta and Cartier, which if it's needed, we could always monetize them. Now, if the markets change, because right now the markets are very dry, we certainly always want to be ahead of the game and make sure that we have enough cash to continue to do our job.
Do you think you're going to monetize some of these holdings, though? Moneta or Cartier?
If we have to, yes. If we don't have to, no. Okay. They're very strategic. The fact of the matter is that we decided to build our position there by selling some of our assets to make it stronger. So there is no point for us to start thinking that we're just going to sell it for cash when the whole idea was to make it a much better project by putting things together. No.
Okay, good point. Yeah, so that's what I was asking. Do you have any warrants that might be coming in soon?
We have warrants. They are at $3. So I mean, unless we get our share price running in a very big way, the warrants are unfortunately out of the money now.
Yeah. So let's hope they do. They do get exercised too. You also have an ATM facility, though, an option basically to sell shares directly out of the company into the market, if I'm not mistaken. How much is drawn down on that already?
Nothing. And we didn't do the ATM with the intention of drawing money, but just to be prepared and to be prepared in any event of liquidity or any M&A situation where we can take advantage of that. It was more on a protection side of things than thinking on drawing money right now.
Okay, so it's more on the defense rather than offense. It's sort of an insurance. Okay, I understand.
Very strategic.
Okay. You also have some debt, though, as you mentioned, and the interest rate on that is not necessarily low. It's 10%. Well, in this environment, it's not super high, but it's still not low. And 10% on $10 million. So what's the plan with the debt there? Do you think you're going to be paying that back sooner, or?
So it's important that we define the debt. The debt is a convertible note, which means that the shares or the money will be converted into shares.
Yes.
That debt that convert was actually done at a premium. And it was done at a premium when we were $1.60 of 40%. So at these levels is almost a premium of 60%. On top of that, important to mention that the debt was not done by an XYZ person or company, but was done by a strategic investor. And if you read the press release on the back of the convert, you can come up with a conclusion of who could be the investor. I mean, they have been very open with us, saying we don't want to disclose our name because we have our personal reasons. But I think you can figure that out. And it was more strategic. More than putting debt into the company, was who was behind that debt that we said, okay, let's do it.
But you have the expectation that the convertible note will actually get exercised, as in you're not going to be paying that. Okay.
It will be converted, and not only that, but the 10% can be paid with shares and cash, or only shares.
Okay, sure. Well, let's talk about the project. This gives me a better idea of where you stand, financially. I think let's talk about the project, because you are, as you mentioned, moving from a PFS to an FS. That's always an interesting situation to me. I don't know how the market is going to look at that. What are you, and you're planning this for the first half of 2024, so relatively shortly. What's your reasonable expected change in numbers when it comes down to well, obviously the grade and the size, but also operational metrics like strip ratios, recovery rates, which are actually already good. But yeah, just your expectation as to how the numbers.
There's one change that will happen right away, and that will be the inclusion of Malartic H into the feasibility that was not included into the pre-fees. So that immediately should give us a hint that, an extra valuation will come into the feasibility study. So as a rule of thumb, on any project, I don't want to refer only to Marban, so I don't have any issues with the regulators, but the way you calculate the net present value of a company is eventually your revenue minus your operating cost, and then you take taxes, and then you end up free cash flow, and then you discount it to the present. If you have more resources, you have more sales, therefore your net present value will be higher. Or what I'm saying is that we have Malartic H with 340,000 ounces, which effectively represents an extra 2 years of production, which if we take it to the present, what's going to be the consequence. So that will be the first effect on the feasibility study. The second effect with the feasibility study is the optimization that we still do. Like, we're still working on, do we need a little bit bigger trucks or smaller trucks? Are we going to use electrical power or not? How would that affect if we were using, let's say, for the sake of the argument, the Agnico mine, the Canadian Malartic mill? The operating cost will be higher, but the capex will be lower. I think a lot of very good things will happen towards the feasibility study, I think.
Okay. I'll be looking forward to seeing what's in there. What about some of the other metrics? As I mentioned, the strip. Maybe you can talk to me about the continuity of the deposit and whether that might prove a challenge in managing the strip, because the strip is currently sitting at strip ratio is currently sitting at 5.1, if I'm not mistaken. That's already not low. So how do you see that developing into the FS?
That is very interesting, because the strip ratio, for your audience, is the amount of waste that you need to take for the amount of ore. So you need to take 5.1 tons of waste in order to get 1 ton of ore. But the important and the interesting thing of this project is that the upper part of the mine, at least Marban, which is the major or the main deposit, does have material that could be industrialized, meaning by that gravels. So that's an interesting point, which the pre-feasibility has not taken into account. If we can process that and that can be sold, then that could be even an influx of money that is coming into that. But in any case, even at this level where we have not incorporated that, which could be a very big change, I don't think the strip ratio will change dramatically from the pre-feasibility to the feasibility. It will help the fact that we have Malartic age, because in combination then we have improved the economics of the project by having more years of production. Now, it is important to mention as well that in these sort of projects, we will be working to find up to 15 years and working on things that are close to surface. That's most of our exploration has been close to surface, because the fundamental value or the net present value will have a big effect within the first 15 years. After year 15, if you keep bringing money to the present, you're really not going to impact the study or impact the project itself. So most of our work will be done close to surface. And I think if I have an area where I see with a lot of optimism is Horizon. I think Horizon has an area that we are looking with a lot of expectations, and that's where we can have the game changer for O3, outside of what we already know.
How's continuity with Malartic age, by the way? Because that's what I was wondering about, whether you can talk to me about continuity on the current deposit, but also talk to me about continuity on the Malartic age deposit.
So starting from Marvin, I mean, the continuity is very pervasive. So you do have continuity within the kilometer that we have on northwestern direction, and the continuity continues down deep. Let's not forget that from Marvin, there was extracted actually over 500,000 ounces from underground. So that is proven, or has proven already, that there was continuity going underground. Why did they stop? They stopped because of gold prices. Now with where we are, that brings a lot of values to different structures that before didn't have any value. And of course, now that we're going to do an open pit, you're aiming more for taking everything rather than only the higher grade zones. And in the case of Malartic age, works the same way. Now, let's not get out of the point of what you're trying to come up with. These are pockets that are already identified. And it's not that we are going to go there and suddenly we're going to have much more. No, I mean, the reason why we have drilled every 35 meters is because we know that is the dimension that we have right now. If we talk about continuity or the future, is more at depth and looking for underground after the open pit mine has happened. And that's not an area where we are intending to spend our money, because we believe that the best way to spend our money is in how we can make the net present value higher in the next 15 years, not year 20 or 25.
Well, I guess one way to do that is if you can put a higher weight, if you can weight the higher grade and low strip part of the deposit in the first years of production. But I don't necessarily know if you have the ability to do that here with this type of deposit.
No, we don't. These are low gold deposits that in any other year you would have looked into the very high grade and do it underground. And the opportunity here is that there were other veins that were parallel, not very high grade, but if you take everything, then you can extract more ore. And that was the principle behind this, and that's what make it work. Now, this is not a project that has low strip ratio, as you well alluded, and that is certainly true. But even with that strip ratio, because of the grade, it allows us to make it a very profitable mine.
Right. It's also probably, well, I'm the furthest thing from geologist, by the way, so I'm just trying to think as we talk here. But what does that mean for grade dilution?
But let's not get wrong. I am a geologist, and I can tell you that common sense is probably more important than having the degree. At the end, with dilution and everything, we end up in 0.98 or 0.97 grams per ton, which is more grade than what Canadian Malartic is mining today. Just to put it in context, So we will have higher grade than a mine that is right now the largest gold mine in Canada. So, under any metrics, Marban is a superb deposit for what we have.
Can you, now that I have you here, and as you mentioned, you are a geologist, I might as well use the opportunity to learn more myself. Well, can you expand more on grade dilution and how that, I mean, just tell me more about how grade dilution would work for you and how it's not a problem.
Yeah, so the way, what dilution means is what is the amount of waste that you will have to take without being able to extract it. So if we happen to have a vein like this, I'll take this. So if we have the full rock and we're going to take it all like this, you're going to have zero dilution. But if I am going to do an open pit, then I will have to mine these areas. And maybe to do the open pit, I will have to take some parts of the outside in order to do the open pit, in order to do the infrastructure. That will create dilution. So if I have to take all this double, that means that my dilution will be 50%. In our case, we are mining something like this, and a lot of the veins are parallel. So we tend to think about internal dilution considering it is zero. But in our case, we run the different algorithms and we include the internal dilution as well. So our dilution goes from 114 to 0.97 and has already been included in the calculations for dilution.
What does that mean, 114 to 0.97?
So the grade right now is 1.14 for all the tons that we have. By the moment that we send it to the mill, because we will take some of the waste, the grade that will go to the mill will be 0.97.
Okay. So that's 15% dilution.
Yeah.
Okay. Right. Okay. Well, I'll be looking out for the feasibility, and we can eventually, again, as I mentioned at the beginning, a lot of forward-looking statements. This is the type of forward-looking statements that I was talking about. We can't really know these things for sure before we actually see them. So I'll be looking forward to the feasibility. What comes after that? I guess some environmental studies, tailings assays, stuff like that you have to deal with. What else comes after it?
So we're working right now on the geotechnical work. We are working right now on some more metallurgical work. We finalized our baseline studies, which is a big thing because that takes 2 years to do it. And that is flora and fauna and water. We are doing more water studies. We are working right now with third-party groups to look into the different quality of rocks and different quality of the gravels that are in the area as well. We're looking into the economics of the gravels because that could be a game changer as well. Maybe this mine is worth more for the gravel that we have than for the gold. That would be very funny if that happens. But there is an option for that as well. So we're looking at this with a very open-minded. There are more work that we have to do. With regards to the tailings and the mill facility, as I mentioned before, we want to take all our efforts to try to see if we can avoid having to do that on site. So if we can work together with Canadian Malartic, with El Dorado, with Goldex, with any of the other parties around, that will be certainly a preference. No. We see Marban as an opportunity to make a change into Val-d'Or. There were areas that were not remediated from the 1980s, so we want to be part of the solution on being someone that will set the example of doing proper mining in the world.
Does the local community want you to do that, or they're happy with you operating there?
So far, yes. The most important thing in all this process is to be very open, very candid, very straightforward. And, we have done different events where we have invited everyone from First Nations, from citizens, from municipality, from communities. and so far has been well received.
What about the
let's not forget that there is always people are not going to be happy with things, and we're not here in the business of making 100% of the people happy. We're here to make the project viable with a majority of the people. No?
I think that's an incredibly good point that you make out that you just have put out there, because that happens on the internet a lot too, right? There's you can never have all the people happy, but it's almost as if the negative comments count 3 times as much as the positive, at least in terms of emotional value.
10 times. Everything is emotional, and everything is perception. I mean, the last news we had locally were saying that we are doing a good job, and I rather keep and leave it with a good note. But the reality is that tomorrow we could have a new major, and the major may not be as supportive. But so far, I think the advantage we have in Val-d'Or is that it's called the Valley of Gold, and there is right now Malartic, Goldex, El Dorado, which are operating there. So there is 3 mines operating. We have, I don't know, probably from population, I would say at least half of the percent are working in mining related activities. We will be part of a circular economy, and that's a very important point, because on this concept of circular economy, it goes to the point of when gold will be extracted from Canadian Malartic and will be finished. If there is nothing else, those professionals that were working there will be out of a job. But if we have now another place with gold, those professionals can be reallocated. So then you contribute into the cycle, which is a virtuous cycle where economically is working. And 2, we cannot forget that the biggest opportunity we have right now with Marban is that it is an impacted area. That was a mine before. And we are just contributing there to make it a better place for the next generations.
What about local government? Just in general, maybe you can talk to me about having a big hole in the ground in Canada, because I think when people think about mining, it's it's a dirty big hole in the ground, and the government doesn't want to do that because they want to move towards so this ESG responsible future. So does the government want a big hole in the ground in Quebec?
Well, Canadian Malartic is the largest gold mine in Canada, and it's in Quebec, and it's a big hole, and it's a big hole that has been generating a lot of good things. So I don't see why we would not have a hole. We have a lot of holes, and that's important to mention as well. Sometimes I will prefer to call what we are going to do a quarry, because if I tell you we're going to do a quarry, it's all good. If I tell you I'm going to do an open pit, suddenly the perception is different. But the reality is that you are just doing a quarry. You're just processing ore in the best way, and after that, you got different options. You got the option of putting the waste back. You have the option of putting tailings back and leave it as it was. You have the option of setting up a new lagoon that can provide more water to the area if it's needed, because there's a lot of water. But again, it's a matter of how can we, live amongst everyone in peace.
Right. What is what's the timeline to production here? But because I know that if these things, what's that?
2027.
Okay, because I know that if these things move too quickly, that can also rub people the wrong way. But if they move too slowly, you're going to rub the shareholders the wrong way. So you have an interesting job.
Yes, and I think the most important thing is to be, again, open, honest, and candid. I mean, we will not get anywhere if we don't have the majority of the people supporting us. And I would reiterate, I don't want to have 100% people happy. I need the majority to understand that this will be part of the solution and that we're going to be doing things for the best.
Is that something that keeps you up at night? Like, is that one of the main things that you have in your head? Like, oh, are we going to get enough local approval to move forward with this?
It is certainly one of the things that we work the most. it's where we put a lot of effort, for sure.
Okay.
I mean, in any part of the world, it's important, but even more in a place like Canada, because we want to set the example.
Yeah. No, that's a good point. That's a good point. And you also come from a very well-regarded mining family in Peru, if I may say this. I think it's a broad knowledge out there. So you probably want to respect that as well, I assume.
Very much so. And again, I was born and raised in a mining family, where I had a grandfather that believed more than in the idea of making money on giving back through mining. And I think as a family, we have done it. I think my grandfather did a great job. My uncles keep doing a very good job. And I think no, I mean, my decision to leave Peru and my purpose was to be the first Peruvian to build a mine in Canada, in the best way it can be done, to be able to recognize the industry. The industry, you have to understand, and gold in general, it's not always great, and we have to make sure that if we are going to produce gold, we produce it in the best way, because there is a lot of gold coming from areas that should not be produced, and it's creating damage, and we don't need that.
What do you mean?
You talk about the gold coming from the Amazon. That's bad gold, man. Like, you are killing trees to take out a little bit of gold, and you are using mercury in the rivers, and you're using kids, and you are using women, and there is prostitution, and you are laundering money. I mean, that happens in Latin America. That happens in Africa. So, I mean, if we think about producing gold, we have to do it properly, because it is the future of a society as well, because gold will be the one that will support the economy, and I truly believe that.
There's series on YouTube. It's called Gold Mafia, and it's Al Jazeera. I'm not a huge fan of Al Jazeera. I'm not necessarily saying they're the best party out there or whatever to watch it, but it's an interesting series that they did. A couple of episodes just free on YouTube. They're over an hour long. I think it's like 4 or 5 episodes that they did an investigation on the dirty side of gold mining. So that's why I asked how come, because I recently started watching that. It's an interesting series for people listening. They might want to check it out again. It's called Gold Mafia, and it's done by Al Jazeera. Anyways, let's go back to O3 here. I don't want to lose too much of your time with my nonsense. But what is happening in between? I think we spoke about the FS and so on and so forth, but you're drilling on Alpha right now, I believe, right?
We are drilling on Alpha. More interestingly, we're drilling in Horizon, where we have a lot of expectations. We have 4 more holes to be done in Horizon. We will continue to drill on another area called Parforu, which we expect to drill in the next couple of months. And if everything goes well, we will be drilling in Ontario as well. We have a project there called Metachuan, which we expect to drill there as well. And we'll see. I mean, the only way we can really turn around Marban and take it from where we are to $1 billion is by having even a massive new discovery.
What are the chances for that?
We put all our effort, and the chances are in the ground. Can I tell you it's 50-50? I don't think that would be appropriate. I can tell you that I've spent already 11 years doing this, and it worked with Windfall, which is now Cisco, and and it has worked so far with Marban, but we need something different, and we're working towards that.
Are you working? I mean, as far as you can tell me, I assume you cannot tell me everything, but are you working with any of the any of the majors visiting the project, taking an interest, want to talk to you, or something along those lines?
We are always very open, and when people wants to come and visit and look at our project, I mean, sometimes we'll be with a confidential agreement, sometimes we'll be just for a site visit. We're very open with our project. I mean, I believe that the academia needs to know about it as well. So if there are students that want to come and visit, we take them. We take the analysts, we take major companies, intermediate companies. I mean, we're very open in that regard. I mean, who visits? I probably would prefer not to mention that, but that we do have people visiting. Yeah.
Well, but I'm just wondering, because you went from what, almost $3 or so, maybe 270, I believe, to now $1.40-ish, 50, so about $110 million market cap, as I mentioned. And I'm thinking, is that a risk? I mean, you're very positive on everything that's happening within the company so far. So when I'm thinking about risks, and I'm constantly thinking about a reason to say no to an investment, because I'm thinking about the risks. As I said, it's a high risk industry. But is it a risk that you get bought out prematurely, too early, at too low of a valuation?
Well, if you make money, if you put your money right now, you don't have a risk, because you will be making the average of any transaction that has happened in the past 3 years, which is between 30 and 40%. I will not be that happy with the 6% that we have, because we bought our shares of family at $3.88. But you come in as a new shareholder, you're going to be okay. So
yeah, well, but also for existing shareholders, though, I think I mean, there's people with shareholders with shares that are bought at the same price as you did, and I think a lot of people are, I mean, from what I can see online in terms of the sentiment, a lot of people are bag holding, as it's called. They wouldn't be happy, so that's why I'm asking whether it's a risk.
Well, there's certainly a risk. When you're trading, when we're trading, and we have the amount of equities and cash that we have, I mean, anyone can jump in. That's a reality. Now, what are the options of them being successful? Thanks God, the regulations in Canada are very strict for someone to be able to take you over. Unless there is a consent, they will need 66 and 2/3. And between Osisco and my family, I think we have a significant amount of shares that we can defend that. Now, the reality is that the proper process, if someone wants something, is that we will have to pass that to the board, and will be a board decision. It's not our decision. I mean, I may think that it's not fair, but who I am to decide for the other 93, 94% of shareholders, right? I mean, you don't know if one of the bigger funds will be happier to have, let's say, for the sake of the argument, El Dorado or Agnico's shares at a 40% premium than keeping their O3 mining shares. I think it's a decision that they will have to make.
Who else is on your board? Well, you're on the board, but who else?
We have Patrick Anderson, who used to be part of a company called Aurelian that was sold to Kinross for $1 billion or so. Subsequent was part of the Aurelian. Keith Mackay, who is our chair for audit, he used to be Aurelian as well. Melissa Desrochers, who used to work for Agnico and Yamana on the environmental and community front, so that's a lot of help there, and someone very savvy. Amy Satov, who has been part of Dundee. Dundee was one of the most important franchise of the later 2000s with Ned Goodman, and she was part of that team. She's a lawyer and a very well-respected professional. Bernardo Álvarez Calderón, who has been working with me for a number of years. He operates 4 private gold mines in Peru, and someone that understands the industry very well. Did his studies at Harvard on the president's studies. John Bursinski, who has been my business partner for the past 11 years. And I think that's and Mary John, who has been one of the most renowned portfolio managers for Dundee as well for a number of years. So we have a very well-established board with a lot of experience in this.
Yeah, I was mostly trying to figure out what your sort of relationship is to the board, whether they would vote your way, but it would obviously do that. I mean, based on the relationships that you've built with them. That makes sense. Well, what about you doing M&A? What about, because you picked up some more ground, but I don't expect you to be buying other companies, but would you?
I will buy other companies any day. It all depends on valuation. I am totally for M&A. I mean, don't forget, we built Vizquerra from an M&A perspective. We did a merger of 4 companies in the moment where no one was doing anything. And that was the beginning of Vizquerra, by merging Eagle Hill with Corona and Ryan Gold while I was the president. And we built on the back of that what today is Vizquerra. And then we span out and built OIII, and we bought immediately Alexandria Minerals, and immediately we did a divestment of our Garrison project into Moneta, and a divestment into Cartier. So I mean, M&A is there, but we have to do it properly. Right now, with the valuation that I have, I need another company that be so or as undervalued as we are, so we could do something valuable. I don't think it's a matter of doing it for doing it, but I do believe that there is a merit on being bigger. Let's not forget about that part. I don't think it's good to be where we are right now. Now I am looking for results from Horizon first, because I believe that we have a big chance there, and I am looking forward to what we can accomplish from our relationship with the major companies around the area where we operate, and see if we can, find a solution for the mill and tailings, so that way we don't have to build that, and that reduce our capex, as I mentioned before, in half. So those are the 2 things that I want to do before I do anything, because I think those are the 2 things that can get my share price at least into better terms from where I could be thinking about M&A.
Well, what are you doing in that regard? Getting your share price to a better place? What kind of promotion are you doing? What's the marketing plan here?
I'm talking to you. I expect that from here there's a lot of people listening to us. We're doing marketing constantly in Europe and the United States. I am right now going to be in Europe marketing substantially, and then the different conferences series begins in September. So we will be in Beaver Creek, and we will be in the Denver Gold Show, and subsequent to that, we're going to be in the Northern Miner Conference, and all those conferences that we try to be and be visible. No, but I think at the end, the fact of the matter is that I believe that the only thing that will turn around us is, again, either accomplishing a reduction in capex by doing something with the majors around, 2, having a major discovery. And we're working in those 2 fronts. The fundamental value is there. I mean, I think that is very, very good. I mean, we have de-risked the company substantially.
Is that what you think the market wants? A better discovery or better project financing, and that's going to help them revalue? Is that how you see it?
I have the sentiment, and I'm not 100% sure, but my impression is that the reason why we have the market cap that we have right now is the perception that we will not be able to raise $400 million, $435 million to put Marban into production, which I think is totally wrong, because I think it's doable. And in fact, we have been talking to people, and I know we can do it. But you as an investor are looking at this and $100 million, $50 million in cash. Are they going to be able to raise $435 million? I don't know. So here I have to go to them and say, listen, okay, I understand. Now I'll give you other solutions. One of them is, we're not going to spend 435. It's going to be only 220 or 200. Then the story is totally different. Or I find a massive deposit that I would tell them, listen, this is so big that doesn't matter what I am going to do with Marban. Like, anyone would come for this new deposit that we just found inside Marban. Because now we could have 300,000 ounces per year.
Yeah. I guess I can say I'm just still stuck sort of on the idea of financing that whole thing by yourself. A lot of it depends on the market too, I guess, though. So that's right. Well, I think I've been through most of the questions that I wanted to go through. What is something that you came here hoping to talk about, but I'm failing to bring up? I guess we didn't talk about all the other projects. So if there's anything,
I think I think we have covered quite a bit. I do want to leave it with a note that with regards to the financing, there are instruments and there are groups, private equity groups that will be very interested in something like this because we have de-risked the project already. And that's a part that we don't have to forget about. It will be much more valuable, don't get me wrong, if we can do it for half the capex, but it is doable. And that's I think part of the message has to be passed, because that the risk of this project has been massive. The amount of money already invested in Marban is over $130 million already spent in this project. That's the amount of the risk that exists here.
Yeah, good point. I think about these things a lot. Like, why does so much money go into the ground and then companies leave it? So how did you even get your hands on this in the first place? Like, why are you the chosen one?
Well, that's an interesting point. It was a company called Nio Gold that was going nowhere, and we were able to buy it for $60 million. And the reason why we were able to turn around the project is because we looked at it differently. The project was always being seen as mining Marban. Quirenza Nolartic was never put into the equation because they were high grade and underground. And we came up with the idea, what if we do it as an open pit as well, and we mine this first, which is higher grade, then Marban. And when you do that, then the economics change dramatically. Let's also remember that 2010 or 2016, when we bought the project, gold prices were totally different. No? So the gold price changes the dynamics as well. I mean, maybe next year, if we are talking in January, gold might be $2,000 and or 2,300, and then we'll have a totally different conversation. Maybe we get re-rated just only on the back of gold prices.
Let's hope that's the case. Let's do. Jose, I really appreciate you taking the time to talk to me. I don't want to lose your whole day. So thank you so much for investing your time in me. I'm looking forward to future discussions.
Antonio, thank you so much for your time, and we're here at your service.